I wanted to take a episode and go back to some of the fundamentals. We started this podcast now. We started the recordings for this podcast, I want to say almost 2 years ago. And we've had interviews with now close to 100 amazing independent consultants, solopreneurs, senior advisors, fractional executives, people out there doing it on their own who have made a great life for themselves. I get the same questions though over and over and over again from people starting out. And I remember what it felt like to ask those questions. So I wanted to take an episode. We're going to go back. We're going to answer a lot of those questions. And I'm going to share some exciting news about what we're building on the back end of this episode. All right, so let's get to it. I'm literally going to read these questions out loud, okay? These are actual questions that have been submitted. If you don't know, we have a link. You can go to the2by2.com and find that link where you too can submit questions. Hopefully soon we'll be up on Instagram and you can DM us. But for now, go to the link, please, and set up send us your questions. All right, so first thing we're going to talk about is setting up your business. Question 1, what do I need to set up before taking on my first client? This is really a generalized question because it really comes in the form of many things. But the general worry is like, oh my gosh, what do I really need to do? Well, I think you need to do less than most people think. I think at minimum, when you have a client, you're going to need a way to sign a contract. You'll need a way to send an invoice. You should have an LLC, but honestly, before your first client, maybe not necessary. And that's really it. Everything else will follow once the work is actually happening. But I want to talk about what you don't need at this phase, because the subtext behind this question is, do I need a website? Do I need to tell everyone what I'm doing? Do I need a logo? Do I need marketing materials? My answer is no, you need none of those things. I think the pattern I have seen in people who 18 months in have enough clients to make this a sustainable business didn't need any one of those things to start out. And if you really are thinking a contract and a way to invoice, that's really simple. We've got a template contract on our website. Just go there and download it, or ask a friend. And to send an invoice, really, you could do it in Word. You could just write a Word document. Yeah, you can have QuickBooks and do all of those things, and you probably should do that eventually, but you really could you just need a record that you send something and have it saved. So that's all you really need. The trick is just to get moving and not to put up false blockers to yourself that are going to create work without adding revenue. Now let's ask what I think the real question should be is, do I need an LLC before I launch my practice? And the answer is legally no. You can work as a sole practitioner under your own business. I think practically speaking, yes, you should. And I think that for a couple of reasons. The first is just risk. Having an LLC separates your personal risk from, your business risk. You don't want to put your home, your children's college savings, your savings at risk at all. And it is, yes, an edge case that something would happen. I have actually never experienced this. I've not heard horror stories about it, but I know that it can happen. And for 45 minutes and a couple $100, why would you take that risk? So the easiest way to do it is go to your state's, 2 ways. Go to your state's Secretary of State website and you can figure out how to do it there, or go to a registered agent. We like Northwest Registered Agent just because they cover every state in the country and they have a really easy online platform behind the scenes. I tell you, I've used them for years and it's like dead simple. Even I can do it. They're really reasonably priced too, and set it up there. What is a registered agent? It's just it started as think of it as a fake address. It's a protection mechanism so that your personal information is not shared. Your business's information is going to be shared because it's a part of the public record. They'll give you an address and a phone number. That means your phone number won't ring. I will tell you, if you do this yourself, you will get hundreds of spam calls from people trying to loan you money. So maybe that's a reason for Northwest Registered Agent right there. But yeah, I think the answer here is, yeah, just go do it. Don't wait. Next question. Lots of questions about S Corps. If you don't know what an S Corp is an LLC different from an S Corp, and which one should I choose? So they are different. An S Corp is actually not a entity type. The LLC is a type of entity. That's what you're going to set up. An S Corp is a tax election that you take with the IRS. And what it does is you are an S Corp with an LLC. So let's go back to business entities. Okay? Business entities 101. You can be a C Corp, you could be an LLC, or you could be a LLP. But C Corps are not, you could go research this yourself, but here's the short version. C Corps have double taxation and they're really not useful for a company of one. LLPs are for partners, so that's not a company of one. Or a partnership would be you and someone else. An LLC is you or you and other people. It acts as a corporation, but doesn't have all of the double taxation and some of the reporting burdens that a C Corp would have. LLC it is. An S Corp is an election with the IRS. It tells the IRS that you're going to pay yourself and that salary, you're going to pay a W-2 salary like you would pay any employee, and that portion of your salary will be taxed with payroll tax, just as it would be with any employee. And then the remainder of your profit after expenses, you can issue yourself as a distribution, and it will be taxed not at your income tax rate or at your income tax rate, but it will not be subject to additional payroll tax. Ultimately, if you make $75,000 to $100,000 in profit, I've heard the number 50,000 tossed around as well. Financially, it does make sense because you're not taxing 100% of your profit at the 15% rate of payroll tax. So long story short, you can wait on the S Corp when you're ready. It's very simple to obtain. Google it. It's going to send you to an IRS form. I think you actually have to print it out and then sign it and put a stamp on it and send it. Maybe that has changed, but that is really not that big of a burden for the amount of money you'll save. Hope that clears that up. Next question, a great one. Once you get into this and you start Googling, this is when these questions start to pop up, by the way. Do I need business insurance? I think it's just a good idea. I operated without it for 3 years. So do you need it? No. But if you work for many client companies will require it. So any large company has a requirement for a vendor having business insurance, but I think it's just good practice and it's really not that expensive. Once your revenue starts coming in, I don't know, a couple $100 a month. Hiscox and the Hartford are the major providers of this. Their policies are pretty much the same. Their prices are pretty much the same. You may also want to think about cybersecurity coverage. I would talk to an insurance broker about what your business is and if that's necessary or not. I think it's going to come down to, do you access client data or do you not access client data? If you don't, and you have, a reasonable, you're paying for Windows Pro or Google Pro and you have a security platform, do you want to pay that? And how much it is just going to depend on your type of work. Baseline business E&O insurance, I think, is something you do want to buy. All right, let's move on. Contracts. So let's go back to the contract. Can I use a contract template or do I need an attorney? So let me answer the second part of that. So if you are going to enter into business with someone, yeah, you should use a contract. When I got started, I used my clients' contracts. They would send one to me. And that was much easier than me trying to develop one and have their attorney review it. Like, what power do I really have? So I use their contracts. Do I need an attorney? Here's where I think you do. I think it's good to have it in two cases. I think when you're going through your first contract, particularly if it is a more complicated client contract, it is good practice to have someone review that for you. And then I think it is useful when you decide to develop a template contract for yourself to do that under the guidance of an attorney. Our first contracts, our retainer was $1,500. We found a local attorney who was a mom who worked part-time in her own practice. It was a really easy and reasonable solution. We used that contract for a number of years. So it paid off. And I think in doing so, we looked more professional to our clients because it was clearly a proper legal document that passed their legal review. Next, rates. So everybody wants to know about rate. The question is, how do I know if I'm charging enough? Well, it's kind of hard to answer that question, my friend, if you don't tell me much about your situation. Bad question. But let's answer this generally. I would approach, rather than give you an answer, I will give you an approach. Top down, bottom up. So top down approach is, how can you understand the market rate for your services? And I think that is a function of what industry and what type of work you do. Are you working in private equity, SaaS companies doing due diligence? Your rate will differ than if you are working in HR in a manufacturing company. So let's understand the context for what others charge doing similar work. Second, your experience. Fractional executives, I think, pay particular attention to this one. There's a wide variation, I find, in what fractional executives are asked to do, and a wide variation in the experience required to do those jobs. Some are true executives and some are not true executives. But I think you need to understand your experience level and factor that into whatever the market tells you that your rate should be. Location matters. So just like industry, if you're working in San Francisco or in New York or in Los Angeles, your rate's going to be different than if you work in Milwaukee. What I have found is that there's kind of maybe let's say 3 tiers of rates, and industry matters here and experience matters, but they're all going to scale together. So San Francisco, LA, New York, more or less the same rate as you would expect, the highest. Then you're looking at kind of second tier cities. Well, not second tier, but these would be like first tier cities. So Seattle, Miami, DC, I'm sure Boston, definitely Dallas. I would say Austin rates fall in this too. Atlanta, that's the next tier of rates. Then below that, you're going to get some of the second tier cities. So the Tampas, I think some of the cities in the Midwest tend to have lower rates. Cities elsewhere in the South, outside of Dallas, Austin, Atlanta, potentially Houston. I think Houston probably has lower rates. Miami is high for obvious reasons, but location does matter. We have created a rate calculator that has an algorithm that factors this in based on our observations. It's on the two.com. You can go and use that, and it's going to factor out these 3 questions and give you a rate range for what it thinks your rate could be. I think that's a good starting point, but there is no substitute for asking people. Get out there and ask people what their rate is. People will usually tell you, or at least give you a range. So that's how I would do it. Now, the other way to do it is bottoms up. And remember, if you are coming from a W-2 job, your salary was only one portion of the cost that a company paid for your services. You have your salary, you have bonus, you have RSUs, the things that you actually got paid outside of your paycheck. And then you have the costs of your vacation, your benefits, your healthcare, your retirement. All of those factor in as well. If you could calculate what those were all up, you would get to your fully loaded cost. Factor in your vacation time, make sure that's factored in there as well. And then you can divide that by the number of weeks and you'll get number of days, working days, and you'll get a daily rate. You can get to an hourly rate, but you'll see that, your rate isn't as easy as you made $200,000 and now it's $200,000. It will obviously be more to account for that. Plus, it should be more to account for the fact that you are no longer a fixed cost, and that has a benefit to the company. And so contractors should be paid more than they pay their W-2 employees, because technically they can get rid of you at any time, and there is a premium that they should pay for that. We created a long time ago, we created an Excel spreadsheet to calculate this. This was the first way we calculated rate. We'll put the link to that in the show notes as well. I think doing both of those things will kind of triangulate you into the range you should be at. And then it's a negotiation with the client. And my guidance here is like, if it's the first time you're doing work, as long as you're in that range, you can give them the benefit of the doubt, show that you could do the work. And then it is good practice, in my opinion, to raise your rate every year at the rate of inflation. Nothing crazy here. If you go to a new client, you of course can raise your rate to whatever you want. If you've gained more experience, you should raise your rate accordingly. But with an existing client, raise your rate every year with inflation. So you're not anchored where you start forever. Next question. Should clients pay me for vacation or time off? Well, they can't. So if you're not an employee legally, they cannot pay you for vacation. And I think no, like my take on this is you should factor it in. And there are ways that let's separate the idea of paying you for a vacation versus you taking a vacation. Yes, you should take a vacation and you should set the expectation, especially in a long-term contract of, when you'll take that off. But no, it is unpaid. I took 13 weeks of maternity leave unpaid. That's how the business paid me, right? Because the business had money from whatever my paychecks were or my revenue was before, and it technically paid me. But no, like no work, no money. That's how this works, guys. That's why you charge a little bit more. All right, let's see the next question. Okay, this is a good one. Yeah, everybody asks this. How do people find their first clients? Most people are going to find their first clients through people they already know. And this is why, if we go back to the fact of people spending time up front on websites and LinkedIn and logos, just doesn't matter. The way you're going to get your first 3 clients is your existing network. Important people I have interviewed on this podcast who are 18 months in and successful, or 6 months in and successful, have all done the exact same thing. And here's what it is. They make a list of 50 to 100 people that are in their network. They typically are people who have maintained a network. So if you are not a person who has cultivated and maintained a network over time, just know your list needs to be longer. And this is going to be honestly a bit more of a challenge than if you were a natural networker. And they go to those people and they have this conversation. How are you doing? Personal catch up. That's topic 1. Topic 2, what are you working on? Professional catch up. Topic 3, let me tell you what I'm working on. I am consulting and helping companies solve XYZ problem. And here is where the next set of, and they do this, right? You're going to have a question, which is, I can do so many things. What's the problem I solve? We'll get to that in a second. But they do that and they have 30 of those conversations in 40 days. And guess what? Out of those 30 people, somebody buys their work. It always happens, okay? That's not even a great conversion rate. If you talk to 20 people and you got one, that should be pretty good. They close. They do. So that's the 3 topics in the call. They close with a 4th thing, which is, who else do you know might benefit or might need this service? And then the people give them names. And this is what happens. Okay. And then if you're really good, what you do is you start sending out a monthly email to all of those people that you talk to. And lo and behold, in 3 years, you're going to have an email list of 800 people, and you will be sending them the monthly catch up, which frankly doesn't need to be more than 4 paragraphs, 2 of which can be about you and your life. They will act. It is surprising how many people actually want to know you went on vacation. So staying human, telling them what you're up to, telling them what you're seeing and some insight you found, and telling them, a short success story with a little ask of, if you see this work, think of me. That's all you really need to do. That is what successful people do. Now, back to the question, but I do so many things. Of course you do. We all do. If you've been working for 30 years, 20 years, yeah, you've done a lot of stuff. That's awesome. Just figure out who needs to hear what. You can solve 10 problems as long as you only tell one of those problems to one person. So think a little bit. If you do 3 things. When I started out, I had 2 stories. I had a story around marketing and the analytics and data around how do you use marketing and merchandising data to drive customer growth. And then I had a story around strategy and kind of typical breaking down a big problem and building up business cases for executives. And I told that story to different people. And so 2 different things resonated. My work in the first 3 years of consulting on my own was really varied. I did pricing work at a technology company. I sat as the interim leader for an enterprise marketing team, B2B enterprise marketing team. And I came in on a big transformation project to work on one particular part of the PMO. 3 really different projects, but this is the craziest one. I did an assessment of a catalog business, which was something I had never done, but an adjacency from the marketing work. I didn't tell the same story to everybody. I told 2 different stories and people heard it in their own ways. And we had a conversation and brainstormed how I could help. And that's how people are successful in this. Get out of your own way, get the LLC and get those 30 names and have that simple conversation. Next question. This is a good one. What financial numbers should I be tracking early on? I love this question because it means you're already thinking about your business like a business. Let's go back to the beginning of this podcast. We were talking about legal entities and should you set up an LLC. So let's talk about the flow of these first steps. This is what hangs people up, okay? So to repeat myself, set up an LLC with the Secretary of State's office or via a registered agent entity setup service. Then you go onto the IRS website. You're looking to file an EIN, which is an employer identification number. You're going to file for that. I believe you can do it online and you will get that number. They're going to give you a certificate. You're going to go to your bank. You're going to set up a business bank account. They're going to ask you for a couple of documents, proof of identification. They'll ask you for the EIN page. They're going to ask you for the certificate of formation. They might ask you for a couple more things and you get the bank account number. They may ask you to come in and sign. Now you're cooking with fire. Okay. So now we've got bank accounts. The next thing you're going to do is I just recommend set up QuickBooks. Sure, there's other ways to do this, but by and large, QuickBooks is the easiest one. And you will set up your QuickBooks, you will attach your bank account and a credit card associated with that bank or a credit card of your choosing with your business to both as accounts within your QuickBooks. Now what's going to happen is every time you spend money, either outbound through your bank or outbound through your credit card, and anytime you capture sales inbound through your bank, all of that will be recognized by QuickBooks. And now we can build a P&L. Little plug here for Ramp. Ramp is a credit card solution that I've used for almost, I think, at least 2 years. I used it at first as a credit card on a friend's recommendation because she said it automates all your bookkeeping with QuickBooks. And that is true. 99% of all of our payables for the business now are accurately categorized in QuickBooks, saving time and money. We don't really need a bookkeeper. But more importantly, all my reports and P&Ls are ready to pull every day without us doing anything. So here's what I recommend the numbers are that you look at. I think you need to look at a P&L. If you don't know what that is, it's profit and loss statement. It's going to show you your amount of money in. It's going to show you the amount of money that you spent on delivering the services. So that's called cost of goods sold, is how we do it. So if you have contractors that support you, they would go there. And then it's going to show you all your expenses that you spent. Some of these are going to be legitimate business expenses, and some of these might be stretch business expenses. Okay, let's just be honest about how you're going to work this. But it does give you the income at the end of the month. And I think you should regularly, every end of every month, you should close your books and you should look at the revenue you brought in and the income that you were left. And I think that should be a regular rhythm in your business from month one. It's incredibly important. After that, what matters next? I think the next thing, in my opinion, that matters is tax savings. So at the end of every year, you will, if you're successful, owe tax. I believe that that's a good thing. I follow this sounds silly, like based on my background, but I follow the profit first system. I set up a bank account for tax savings, and at the end of every quarter, I sweep the percentage of what I think our effective tax rate will be at the end of the year into a separate bank account where it waits to pay taxes. If you have an accountant, they'll help you with this. But that way you're never caught off with you spent the tax money. And some people do this. It's wild to me, but this happens. Don't let it happen to you. So track how much money you are saving towards your future tax obligations. And then the next thing I would check is how much cash do I have on hand? So back to that business bank account, how much is there? You will be surprised that profit does not equal cash because the timings through the month are constantly different. And the timings of when the money comes in from your clients can differ as well. So keep an eye on the cash you have on hand. And that's it. That's all I would look at. Okay. Your P&L, your tax reserves, and cash on hand. All right. Those are the basics. Next, what are the biggest tax mistakes indie consultants make? Okay. We just recorded an episode with Lori Jones. She's a financial advisor. She gave a lot of really great tax advice, especially for people that are starting to scale their businesses. But let me give you the categories of these. I think that's what would have helped me when I got started. Rather than thinking about the tax mistakes you can make, let's talk about how do you actually maximize tax potential. So why is there tax? But the tax code in the United States is a blessing to small business owners. In my opinion, these are ways that the government chooses to stimulate our economy. And therefore, we should be obligated to be participants in this economy and help to make it grow. So ways to help with your tax savings or just recognize your tax expenses. Number one, okay, basics. So your home office is a tax write-off, the space in your home that you have dedicated to your office. Hopefully it has 4 walls. That square footage you can depreciate as you would any real estate. All right, so that's basics. Number 2, along the same lines, your car. If you drive to client sites, your car, over 50% of the time, that's what the vehicle is used for. It is a business expense, and there's some really interesting one-time savings programs that the government uses as incentives about buying vehicles. These are aimed at larger vehicles for companies that need trucks and whatnot, but there are vehicles that fall into that set of criteria that any business owner could surely take advantage of. You've seen a guy with a G-Wagon. Why do you think he bought a G-Wagon? It was business expense. I don't love a G-Wagon, but here we are. People do that. You could lease a car as well. And that's just another mechanism to take advantage of those. But there are kind of what I'll call like these basic business expenses that every business has. Your computer, your internet, your phone, those should all be recognized as expenses paid for through your business and then tracked in QuickBooks to ensure that they're taken out of your taxes. Number 2, retirement. Don't neglect funding your retirement. You can float a year or 2 as you're establishing your business as needed, but after that, don't neglect doing that. The good news is that there are many tax advantaged retirement savings plans that business owners can take advantage of. So let me just give you some examples. Number one is the solo 401k. So if you're a business owner and you don't have employees, you can establish your own solo 401k. You can do this through your brokerage. You can establish it through Schwab, through E-Trade, I'm sure, potentially even through Robinhood now. But this is your account. And you can also, if you don't have employees, you set one up for yourself. You can set one up for your spouse as well. And you contribute to it, and then the business can contribute to it. So it can save up to, let's call it $70,000 a year, which would be taken out as an expense from your revenue, thus lowering the amount of income tax you would pay. It's a huge win. Huge win. When I did the calculations on this 10 years ago from my corporate job, I actually made significantly more money as an independent consultant simply because of the tax savings and being able to run this retirement program. Like, it was amazing. So don't leave that aside. There are more sophisticated mechanisms you can set up as your business grows, but I think that's level 101 that every consultant should have. Those were great questions. I really appreciate them. I hear the same questions so many times, and I really hope that this episode, and at least my humble opinion on these topics, has given you enough information to take the next step and know where you stand, what you may not have known, and make your knowledge gathering a bit easier. To help with that further, we're going to be launching an Ask Me Anything space up at the 2x2 shortly. It's going to have a searchable library of over 100 questions that you all have submitted related to independent consulting, fractional work, senior advising. And you can go and sign up now. Access is free. I don't think it'll be free forever, but it definitely is free now. We'll put the link in the show notes, and keep submitting the questions. No question is a bad question. And I feel that I wish that I had had someone who had been doing this a decade ahead of me to ask these questions that I felt were really basic, but somehow confusing at the same time. And I hope that this is helpful for you. If not, sorry. If it is, let me know. We'd love to get reviews, hear your comments in the reviews on